All right, how's everyone going so far? A bit of a comeback on the markets, hey? And Eurodollar did what what I was saying, not this thing, not this, on the target here, right? So we got on the target here. Now, market is a bit of a push. How many points is that? All right, guys. So market had a quite of a big move um from all the way to 190, 141 to 1.10. Wow, 1.10, pretty much 1.10 500. So that's a 130 pips move. That's a pretty good move. Just remembering everyone, this is a 30-minute chart. But what I want to discuss about, and the reason why we had such a big move like this big upward move here, was mainly because of the CPI from yesterday. So we had the CPI from USA, of course, yesterday. Let me just, this week, we had right here, came in at oh sorry, this is the PPI, Wednesday, there we go. CPI 2.9% from the expectation, not 3%. So in a sense, that was pretty much nothing, all right? There was 0.1% lower than what was expected to be. And one of the things that I've noticed, and I think probably everyone that looks at CME have noticed it, is that a couple weeks ago we had, and I've shown these, all right? I've shown these on all blogs. So let me bring up the blog here. Learn. Oh, so for those who don't know, we have daily blogs, okay, on the website. So every day we have I writing everyday blogs, analysis, pretty much analysis, every day, and then we upload here on the ACY website. It's very easy. You can just come to ACY website, go into learn, and then you go in market analysis. Oops, sorry. Click on market analysis. What's going on here? Oh, sorry, my Zoom. Let me do it again. So come to learn, and then market analysis. Well, there we go. And then you have market analysis. You have my name. You can click on my name. You have Duncan Cooper, Michael Moran, Nathan Bray, and so on. But let's have a look on here on what I've, Lucas Santos. I think was this one. I think that was yesterday's. Oh no, this one is today's one. Oh no, this one is today. Yeah, that's the one. Just a second. Okay, where it is. Okay, that's not the one. Political tensions. No, this one as well. Can't remember which one was exactly, but I want to, oh, there we go. That's the one. All right, so if we look here, what of the potential outcomes and scenarios was that scenario one is an aggressive Fed rate cuts, all right? And if the Fed decides to cut rates aggressively starting in next month, and in September, 18th of September, we could see a sharp depreciation of the US dollar. And this scenario would likely boost US exports, of course, because, making a lower US dollar is much better for people to buy cheaper prices from outside of the country. Then we have scenario two, that is delayed Fed action. So if the Fed delay the rate cuts, the dollar will initially strengthen, okay, because investors will continue to benefit from the higher rates, higher yielding. But this could make some economic slowdown, and of course, this is not great at all, because eventually it's going to lead into a leading to a more pronounced downturn and a much more sharp reversal on the dollar strength. So, and the scenario, you know, I've put it up the third scenario, but I don't, it's not because it's here that, you know, I 100%, 110% believe on that, but it's just because it is happening. So we need to have these as a backup plan, as I should maybe say. So the scenario tree is global risk escalation, right? I think probably you guys don't know, but we are having some geopolitical risks. And if these geopolitical risks increase, this could lead to, you know, money coming into money coming to safe havens. And of course, the US dollar will benefit from that because US dollar is a safe haven. And this scenario would 100% see the dollar strengthening because, you know, it's pretty much the opposite. Can you guys hear me? Is everything okay? Just let me know, guys, because no one chatted with me. Oh yeah, okay, cool. Thanks, Aditya. So you know the US dollar investors will look to the US dollar as the safe haven, as they always did. Thanks, Tish. Thanks, Zodwap. Hello, Sweets. How you doing? So you know, investors will be looking to that and think, okay, yeah, perfect. That's what we want. We want safe assets, and US dollar is the one to provide to us. So therefore, we're gonna buy US dollars, and therefore US dollar will strengthen because the demand will increase towards the US dollar. All right. So that's pretty much my three scenarios, but I've changed it. All right, I've changed it. I didn't have time to write my scenario today because I was, you know, back and forth to some of the stuffs. But and this is why we're gonna chat today. So my scenario for the US dollar has changed, and I would not aggressively change it, but it has changed it. And the way it did, it was from a neutral to hawkish to a bearish cycle, right? So we're going to dive deep into a US dollar being a weaker currency for the next three to 4 months. And I'm expecting the US dollar to kind of suffer a little bit now in the next month or so, you know, going from the next 18th of September onwards into December. The main reason, okay, the main reason for that is because of this. Right. So, so for those who don't know, I always use this tool. It's a public tool. Everyone have access to it. Let me share it on the chat. It's called CME Fed Watch Tool. What it does is actually you can register yourself. Okay, so you can register yourself because it's a public thing. So if I do my login here, I will get into my account. I just can't remember my password, otherwise I would do it. But anyways, so you can actually register yourself, and then you're gonna get an email every month or every quarter. I think it's every month. Depending on where do you work and, you know, or what sort of background you have on finance. You can say that you are a trader, you speculate in the market. So that counts as well. So they're gonna send you a quiz, not a quiz, you know, you're gonna answer them. What do you think about the Fed? So if you think that the Fed's going to be hawkish or dovish or neutral, and what do you think about the rate cuts expectations? You think that the rate cut will happen, or do you think that it's not going to happen, or if it's going to, or whatever, maybe have a hike? You know, who knows? So this is pretty much the tool that all the market participants kind of use. And this is simply to gather information on the Federal Reserve, the FOMC, the Federal Open Market Committee, for rate cuts, rate hikes, and so on. So 62.5% of the market is expecting a cut. What I mean, how do you know that this is a cut? Not a problem. I show you right now. Let me grab my pencil. There we go. So here is the current target rate, right? Current target rate is at 525 to 550. All right. So they can't. Why is the target rate? So why is the like a 25 basis point here of difference? Because from 525 to 550, we have a space. Why does this space happens? Okay, we have a 25 basis point space. This is because we know, oh, sorry, this is a 550, not a 525. There we go. 550. Perfect. So from 525 to 550, we have a 25 basis point of a swap, let's say. And this happens because the Fed can't maintain the rate as a set amount and this is it. Like it's 1% and this is it, nothing else. No, they can't. Because in the economy, it works as an live organism. Okay, if I can say that. But what I mean by live organism is because there is fluctuations on the economy, right? You have positive fluctuations, you have negative fluctuations. Sometimes you don't have fluctuations. Most of the times you do have fluctuations, and those fluctuations will affect directly or indirectly into the rate of the target, into the target rate of the central bank. Okay, it's not only with the Fed, it's with all the other central banks. The Federal Reserve, the RBA, the Reserve Bank of Australia, RBNZ, the Reserve Bank of New Zealand, the Bank of England, the BOE, the BOG, the Bank of Japan, and all the other central banks. Even with emerging markets, G8, G10, you name it, they have a target range of rate. Okay, so this prevents the market to collapse. All right, and in that way they can work on a flexible way. All right, the best way to think about this is get a wood, right? Piece of stick, a wood stick. All right, a wood stick. You have the knot, and then you have the knot, and then you have another knot here. So you can't. This is not this is rigid. All right, you can't take it and then take with your hand here and take with the other hand here and try to bend it. All right, what can possibly happen is kaboom. All right, one piece of the stick will be in one hand, the other one will be on the other hand. So you have pretty much two sticks now. From one you made two, and from two you can make four, and then goes like that, right? So that's exactly what happens if it's not if the target rate is not it's not mobile. If you don't have that 25 basis point of difference from the target range, then you are on big problems. Now, take a pencil or a pen, right? If you try to bend it, you can bend it a little bit. Of course, you can't bend all the way down, but you can bend at least a little bit. So this is how it should work on the rates, exactly the same. They should have sort of a you could sort of take a little bit down and up and experience different fluctuations. All right, so same goes for this 25 basis point here of difference. So now, how do I know that 62.5% of the market is expecting a 25 basis point cut? Well, it's pretty simple. So 525 to 550 is the current target rate. Now, they are expecting in 18th of September, all right, so here's the date, 18th of September, 18th of September, 62.5% of the market participants are expecting a 25 basis point cut because now it's from 5 to 525. So what's the cut here? from 525 that was previous to 550, it's a 25 basis point cut. All right, so that's how you go. And 37.5% of the market's expecting a 50 basis point cut. Okay. So hopefully you guys could understand. So my expectations now for the US dollar has been changing. All right. So from a very hawkish standpoint of view, that thinking that the Fed wouldn't cut anything from January this year, I had this mind. All right. I had this like, yeah, the Fed won't cut, to last week. And then last week was, yes, they will cut in September. Look, we had such a bad data coming from the NFP. Really, inflation is coming down. All right. We are seeing progress towards inflation on the USA. So if you go to FinLogic's economic calendar, I've dropped off the link on the chat, and click at the United States inflation rate year over year, you can see from the 1 year, you can put it up on the line chart. I prefer line chart. You can see better the declines as of the, it doesn't give you the same impression, let's say. So the green line is the forecast line, and the blue line is the actual, what it came in, all right? So in 13th of August, 2023, the forecast was 3.6 and the actual came in at 3%, at 3.7, so 0.1% higher than expected. In the 12th of September 2023, we had forecast again 3.6 and they came in at 3.7. And then we had a even better than expected in the sense of lowering inflation in November, from 3.30% forecast to actual 3.2, and then again in line as expected, and then a surge on inflation, and then now sort of like I even could say that this is a somewhat of a consolidation on the inflation. Okay, being the 3.43 a higher band, and the 3.12 or somewhere around those numbers, the support of these. But all right, so pretty clear that we came from 3.7 to 2.9. That is really good. Okay, that is really good. Congratulations to the Fed, because lots of people didn't expect that to happen. And in a sense, I was one of those. Okay, I was one of those that, okay, the Fed won't cut. We need much better results from the Fed to them be able to cut. But look at these. We're coming down. All right. Yes, the road was very bumpy, but we are down, and that's what matters. That's what matters. All right. Now, if we have a look at the DXY, we can see the DXY coming lower as well. But wait a minute, this is not updated. Let me go to TradingView for a second. All right, there we go. So we can see the DXY coming down very sharp. Okay, very sharp. This is a 4-hour chart. If we go to the 1 hour, we can see no retracements at all happening on the US dollar index, all right? Because we came all the way from 106,000 on July. I'm talking about July, less than a month ago, all the way down to 102, all right? So 102 was actually here. This is 102,500, but still, this is a 4,000 points move, and that's a lot. I can tell you it's a lot. How much percentage is that? Let's have a look. From the top to the bottom, that's a 3.7% move. For the US dollar, that's heavily moved. All right. Even if we want to count down all the way from April to the bottom here, that's a 4% move, negative 4%. Okay. So the US dollar is losing its strength, but of course, we will continue to have some sort of strength sometimes. Okay. Why? Because not of the US dollar, but yes, from the base or the quote currency. All right. So what I mean by that is, let's say if we have euro dollar, okay? Let's say we have euro dollar. We're trading euro dollar, and this is the base, and this is the quote. All right. So the euro is the base, the US dollar is the quote. We have, I think everyone knows, or most probably everyone should know, when the euro is stronger, what will happen with the market is go up, right? When the US dollar is stronger, what will happen with the market is go down, all right? So when we have the US dollar being weaker at this moment, that means that the euro is stronger, and therefore we're having a higher move. And that's exactly what we can see on here. Okay, we can see exactly this happening. The US dollar, with the expectations of the market, knowing that the CPI would come lower, knowing that they would have a bearish attempt, let's call like a bearish attempt on the CPI, and the market is just precifying this. Okay, therefore they are buying euros and don't caring about the US dollar at this moment. So now the question comes to my mind. So should the US dollar continue to go, deeper and deeper in terms of bad, or will we have a reassurance of the US dollar in the short term or anytime soon? I had some answers. All right. I had some answers because so most of the people I talk to, they're like, what does a fundamental trader does? What does a macro analysis trader do? My answer is pretty simple. Ask questions to yourself. All right. Read a lot of content. All right. Read. The more you can, the better for you. All right. So and then ask you questions on base of what you have understand from that text or from that whatever you're reading, news or paper or etc. So when you start asking questions, you put your brain to think. And when your brain is thinking, he's making the muscle of the brain stronger. So every time you start to thinking differently on a different sort of different, how can I say that, different way of thinking, you make new perspectives. And with new perspectives, you can sort of understand better how the things works. Okay. So that's exactly what I've asked myself. Okay. What happened last year? We had SVG, we had SVS, sorry. Yeah, we had the bank crash. Yeah. So we had bank crashes, banks running off on default. That's what does that mean? Pretty much banks out of money to pay their clients. Yes, believe me or not, your money is not safe on the bank, and this can happen with any bank. All right. One day I will specifically talk about the bank's system and how they work. Because my friends, I can tell you that it's not what you guys expect it to be, like they're safe and etc. It's a very tricky, very, very tricky situation. And they've been using this for hundreds and hundreds of years. Okay. But who am I to judge? Anyways, so I was like, okay, last year we had the default. They have so much debt to pay at this moment that they have to do quantitative tightening, right? They have so much money out there that they've printed quantitative easing. It's okay. So we have two things on the economy: quantitative easing, quantitative tightening. Quantitative easing is printing money. All right. So last year, because of COVID, because of the banks default on liquidity default, and etc., we had so much, but so much money getting printed that this is why, this is the reason why we had such a bumpy, all right, from the 3 years. Look at here, all right. So this is it is that, let me put it from 23 January to 24 September. We can see this. That was consolidated, right? We were on 3%. We were in December, and now we're back there. So in 1 year, we haven't made any progress. What's happening? They can't pay. They own debt. And now the market is looking at it and be like, oopsie, we are drowning. And if we are drowning, who's going to pay to us? We have to print more money. And then they go, and then it happens again. So I'm not saying that will happen another bank default or anything like that, but now the mind will all bring together again. We're going to have the Fed cutting the rates. We're going to have this inflation, sticky inflation for maybe another year or so. And it goes only worsening and worsening. So my expectations is, all right, for a short-term trade, all right, let's go for US dollar, euro dollar here. For a short-term trade, I'm looking to short euro dollar. Okay, let's go for 50-minute chart. I'm looking to short euro dollar exactly where it is at this moment, okay? And until this area, oops, sorry, until this area. All right. I know it's a very short trade. I know. But it's a very good trade as well, in my opinion. I'm not saying for you guys to do it, all right? I'm just talking about my personal portfolio. So it is a very short trade, but it's good. If we have a break through these lows here, I would say somewhere around here. If we have a breakthrough this low, then we may come even lower to this area. Let me just do it here. So first target would be this one, and we would be aiming on here. And then if we continue to go lower and we break through this low point here, let me just change the color to a red. I would be aiming into this direction. Okay, so that's the reason why I'm shorting the market now, because we have a possibility for a short take profit, but once the position comes to here, we manage my risk and probably take 50% off, of my position, and bring my stop losses to break even. And also bring my stop loss to break even, I will just carry the trade. And if it gets my stop loss on break even, that's fine. I still make, some percentage. Sorry. But if the market continues to drop and break through this low point, that's where my expectations are, then there's nothing to hold. All right. And if there's nothing to hold, most probably we will come to this box. Okay. So that's my thinking around the euro dollar. Okay. Now, in terms of, let's come back here. In terms of calendar, we don't have pretty much anything happening. Thursday, there we go. So at 10:30 today, we're only going to have retail sales month over month, and that's going to be pretty interesting to see because we had 2.9% inflation, and the PPI as well was lower than what was expected. So this it's going to tell us the truth because I've already explained that so many times, but retail sales is me and you buying whatever, buying buying an iPhone, going to buy clothes and etc. So this is retail sales. And once we have a certain period of retail sales going too high, because look, previous was 0, and now it's expected to be 0.3%. It's interesting, right? But if it comes higher than expected, this will strengthening the US dollar. And that's what I'm expecting to happen, okay? Because things are too lined up. CPI and PPI, they are lined up. Retail sales will probably be a bit different. But the other way to think about it is it could be much worse than expected. And that will be very bad for the US dollar. Why it could be much worse? The simple reason for that is we had, a average hourly earnings much lower than what was expected last month. And that means people are not getting paid. All right. If they're not getting paid, then they don't have money to spend. And if they don't have money to spend, they're not going to buy products. So retail sales would go lower. So very tricky situation right there to, have a model on top of this or anything like this. Now, after that, we only have some small mid news. And tomorrow we have retail sales from UK and building permits from USA. And that would be, and the consumer sentiment preliminar for the month of August, but that's it, right? So nothing too crazy happening right there, all right? Now, I do expect, as I say, to come lower here, and then after that, maybe if we break this bottom, we continue to go lower. Any questions on that, boys and girls? Let me give a sip of my coffee. Yes, it's 7. What time is it? 7:45, and I'm drinking coffee. I'm addicted to coffee. All right. Moving on then, no questions. Pound dollar. Pound dollar. Oh, there you go. That's my target right there. Hit my target. Let's count this as a hitting my target, okay? Because, 0.1% here, not going to change anything. Right. Please, can you come back about the target for EURUSD? Yeah, not a problem. So I'm looking to target this one go coffee. Alright. Okay. So for the euro dollar 199.30, it's my first target. And then if it breaks through the 198.20, I will be going to 192.222222. All right. So that's my targets there. Right. Coming back now to pound dollar. What a tricky little boy here. Because yes, this was a very clear trade. Very, very clear. I think everyone can agree with me. Not a problem. Everyone can agree with me that this was a very clear trade. Okay. But right now, I don't see anything happening here. All right. To be honest, if we look to the pound, okay, let me just come back up. This is the beautiful of the FinLogics. It's so practical. Like you can come here and then UK. This is it. So good. Let me take the median off. Okay. The low is already off. So the employment rate is better than expected. Okay, so if we look at it, it's really good. It's really good. It was 4.5 forecasted and now it came in at 4.2. So that is really good. Okay. Inflation rate is coming down. So what is going on with the market? If inflation is coming down, shouldn't the pound coming down? Shouldn't the pound be coming down as well? No, because what is happening with the US dollar? What's going on here is the context of this trade is a long position. The reason because of this trade is because the market is looking to who has the lowest inflation now. Because they know the Fed will cut and they know that the Bank of England is continue to cut. So there's no sense for them to start, oh, I need to put my money there, I need to put here. No, where is the safest place for me to put my money? Well, UK at this moment. So therefore, let's buy pound. And this is the reason why we're having this move. Okay. So it's all about context. Now, we have the manufacturing production as well, better than expected. The only thing that was in line of the expectations and a bit lower was the quarter-over-quarter preliminary GDP. All right. But the year-over-year was better than the previous. So that's a good take. And the month-over-month was worse, but as expected. And then we still don't. Oh, we already had this. Oh no, this is Friday. Sorry, this is Friday. I thought this was Friday, but no, this is. I thought today was Friday for no reason. But yeah, so we had the release of the GDP today and came in as expected. So no changes at all. So trading this little boy here, what I can probably see is coming to this direction, coming to the top here. All right. To be very frank with everyone, but a very risky trade. All right. Because the US dollar can strengthen at any moment. So on a lower time frame, yeah, I only see it here. I don't see anyone anywhere else. Well, here, but only if it breaks this bottom here. But it doesn't look that's going to be happening. Now, let's have a look on gold. Okay, 4 hours, that's good. Lots of people ask me, right? Can you explain how hedge funds analysis the data between two economy? In what way? That's a very broad question. Because there's ways and ways, right, to analyze. I've worked for a hedge fund, and I can tell you, it's no difference that what I'm doing with everyone here. Except for one thing. And that's what makes the whole thing different. Yeah, they use a lot of spreadsheet, but we don't need to use a spreadsheet. I mean, yes, I've done one video on YouTube already how to, use the spreadsheet on the way as I used to use on the hedge fund. But what I can tell you is the best way, okay? The best way for accessibility is to read all the news. It's go and dig deep on Google and everywhere about economy. All right. Is to build your own models. And the big difference about hedge funds and retail traders are models. Okay, they do have people building models for them. And I'm not talking about little cheeky models. No, I'm talking about very complex models that will predict the price, that will predict volatility on the market, how they're going to hedge, right, and so on. So It's a very tricky question to answer you, but next week I can probably answer you better, showing you some things. So did I answer your question in some instance, Satish? Hopefully I did. But yeah, look, there's no difference. I was doing exactly the same thing when I was on a hedge fund. I was exactly the same thing. I was looking at the charts, I was thinking about what could happen. I was an analyst. And then moving on, this, my job has to pass on to the trader, and then the trader see if they want to execute the idea or not, and how they will manage the risk. Okay. All right. Yes, I will talk about gold right now. I was just answering Satish's question. Thanks for your question, Satish. Is your first time here? I've never seen you here, actually. Thanks for coming. All right. Yeah. So gold is trying to break all-time highs again. Little cheeky boy right here. Okay. This is all-time of gold. Tried once, twice, fail, right? And what I'm expecting, this, okay? Even if comes like somewhere around 250, 20, somewhere around here, then I will expect this to happen, okay? But yes, I'm shorting gold until somewhere until 2,390, okay? Until somewhere here. That's my take on gold, all right? It doesn't matter what the Fed does, doesn't matter what anything does. This is what I'm looking for gold. Please, have you talked about the CPI that came out as expected? Yes, I did talk about the CPI. Unfortunately, Switz, we're not going to have time today, but the webinar will be uploaded tomorrow morning. First thing I will ask Dave to do, and then I will send the link on the Telegram, and then you guys can watch the record. Sorry, Switz. Steve says, evening, Luca, what are your thoughts on US unemployment claims this evening? Apologizes if you covered this early. Sorry, the what? Sorry, US unemployment claims. I haven't looked at it, actually, to be very frank with you. US unemployment, Thursday, here. US unemployment. Look, I don't have this here. US unemployment. Yeah, I don't have it here. Market applications, purchase, crude oil, Fed Bostic, Red Book, PPI, core PPI, PPI, business, monthly budget report, consumer inflation. Yeah, I don't have it here, but I don't look much with like these unemployment claims as a weekly data. All right. I look more into the actual whole NFP because that data it's too small period. All right. Let me tell you the last thing, guys, and then I go. The bigger the data, the more influence it has on the market. So if it's a monthly data, it's going to be a big influence. If it's a quarterly, bigger. And if it's a yearly, that's much bigger. All right. So if the yearly data comes, if the yearly data comes very way far from what was expected to the consensus, then you can guarantee that this would be very different from what it was from a monthly data. All right. Because higher the period, higher, this is basic economics, okay? Higher the period, higher the interest. All right. Interest, I mean interest in the market, because it's much better for me to know what's happening on 1 year than what's happening in a week, right? So that's what I think about these weekly datas. All right, guys, thank you so much. Have a great weekend ahead. Good to have everyone here. Good to chat with everyone. And I will make sure to fix that link, the webinar link that was going to Duncan webinar tomorrow morning. All right. Thanks for letting me know, Sweets. And who else was? I forgot. I think it was Steve. No, I can't remember. Zodwa. Thanks everyone to let me know. Aditya says, can you make a special video on your strategy? Yes, we need only 2 more subscribers into the Telegram, because I've mentioned about my Telegram hitting 200 subscribers, and I would go, oh, we need 5 more. So we need 5 more subscribers on the Telegram, and then I will make a video on my strategy again. All right, Gina the Sweets, have all a great weekend ahead, guys, and I'll talk to you next Tuesday. All right, thanks, guys. Bye-bye.